It's a very important show today if you are a Tesla investor, because a couple of really big things are happening very soon. First, tomorrow, Tesla's going to be submitting a proxy statement to the SEC. So we're going to have Alexandra join us and be able to give us some information about what to prepare and what to be aware of what's going to be happening. This weekend, we're going to hear Tesla's report of their production and delivery numbers, and every sign is pointing that this is going to be a record Q1 for everybody. So let's go to CyberBulls.
Tesla is the most consequential company in the world.
I'm the bull on the EV business. I think the margins are going to explode.
Still the same company. Company is still executing.
The energy is bigger than the auto business.
I'm the young bull that talks a lot of smack.
All right, welcome everybody. So very first question to anybody here who can answer this is that we just saw the China numbers come out. The last week came out very good, and I'll walk through the details of that. But why did the stock fall? Why is nobody preparing for this? And I know you sent out a tweet there, Christian, saying that nothing's going to happen. It's all Fed macro controlled at this point. What's your answer to this?
Yeah, I think that is true. I think I also said in there the fundamentals are kind of getting pushed to the side, right? So the macro and the Fed rule the day, and good fundamentals are being pushed to the side, right? Because everybody's super worried about what the Fed next move is. They're worried about inflation. They're worried about whatever you want to say. And it's kind of what we've talked about the last few weeks. A lot of this is baked in, right? We kind of know what Tesla's going to do kind of on Q1 deliveries. So it's an inline number. I think it came in at just over 15,000. It was a good number, but wasn't a blowaway number. So it didn't really change anything, I don't think, for Wall Street or analysts. So I think that, that in part with, of course, the macro and the Fed is just making kind of a wishy-washy market. And we'll get into more detail, but I just don't think it's going to do anything right now. And it looks like we rotated back out of growth. You see Qs are down, Google's down, Tesla's down, and they're moving kind of back into value. And we're just going through this sloppy market. Yeah.
All right. Well, you said that it's just expected growth, but this is record numbers we're talking about. Okay. Let's quickly go through what we saw in China was released. Was it just yesterday? And they said that last week, 15,886 Tesla China was able to, cars bought last week, and there's still 1 week left in the quarter, and they're already at record. We're already at the record quarter for China. So you can see here that this is still missing one more week that's going to be added to this. And we're already at the record numbers. This is the first month, second month, and third month. Third month is not done yet for Tesla sales in China. And so this is boding very well. Here are the estimates for 2023 Q1. Troy Tesla is at 413. Wall Street consensus at 420. Big Tesla at 420, Larry Goldberg 430, Emmett Peppers 440. So I'm curious where you guys are sitting with this. Let's go with you, Jeff. What's your thinking about all this?
Yeah, when I saw the China numbers last night, there were just a few thousand, maybe softer, but they were strong. It was a good number. So I'm somewhere between 425 and 429.
Okay. And so do you think that this was expected by everybody, or is this is this not a record number, guys?
No, it's a record. I mean, you have to look at the quarter too. One, the pricing changes didn't go in until about, I would say, the third week of the quarter. And then there was pent up demand, waiting for that. The other thing is, it's Chinese New Year, where there could be anywhere from 6 to 8 days of, obviously the production's down, and also there could be some spotty sales in various regions. So for it to be a record quarter with those things happening, I would say it's a good thing. And I think I would look ahead to Q2. Q2 should be stronger.
Okay.
Yeah, I agree. I agree with Jeff. My number is quite higher. But first I want to correct Troy, and this may be the Patreon number, so I don't want to spill it, but is considerably higher than what you showed on that tweet. So the market is still around 420, 425. I am at 437.5, which is considerably higher. Yeah, I know. So I'm considerably higher, and I've really done my analysis. I do believe we have an extremely high quarter, both for the Y and the 3 in the United States. Do remember the standard range 3 may not have the tax advantage anymore starting April 1st. So I think that those buyers have been contacted and have taken their cars. I'm obviously checking all the time on the Santa Barbara shop that they're selling cars as if it's the last cars that are available on Earth. It's crazy. China, the numbers are and have been, especially the last 2 weeks, much higher than we expected. And Europe, the numbers out of Europe are absolutely stellar. So I'm at 437,500 for deliveries, and I'm at 460,000 for production. So why am I maintaining a higher number for production? Well, the first thing I checked is since when did we build up inventory? And that is the second quarter in 2022. Then we had little inventory, but just short of 4,000. Then the next quarter, it went up to 22,000. And then year end, it went up to 790, something like that. I do believe they absorbed some of that. As you can see, I think we're down to 23,500 now just because of all the price incentives. Remember how they pushed that inventory in January, both in the United States and in Europe. So I do believe, so my numbers are 437.5 for deliveries and 460 for production.
Yeah. I'm not as detailed as probably you guys. I'm just looking around about 5% more. So general rule of thumb. So I'm looking around 422,000. I'm just kind of being conservative. And I think if they get anywhere over 420, that's a solid result. And I think the market would treat that well.
Okay. Yeah. I'm at 430. And it's interesting though, but look, what number would move the stock or just the, change the narrative of Tesla? Like you guys said earlier, that's the part that's confusing me. You guys said earlier that it's already baked in. Everybody kind of expects a record quarter.
Yeah, that's the problem, Herbert. It is kind of baked in. Like all the analysts are in this 420 something area. So to your question, in order to get a stock to move, something has to happen that no one expects to happen. So if you get a number in the 420s, it could be a good result, but it doesn't mean the stock's going to explode, right? Because everybody kind of knows that. And remember, everyone's buying and selling on the information. So I think you need a number. If you get a number over 430, I think that could be a net positive day. 430 would be a number to me that if it's not green, I would be surprised.
What do you think, Jeff? Can't hear you, Jeff. You're on mute.
Sorry about that. For it to be a narrative changer, I would think it'd have to be, closer to 440, 450, to say like, hey, like something's going on, like we missed something here in terms of deliveries. I think that would have to happen. But I agree. I think anything, over 420, 425 is going to be considered like, wow, they're growing sequentially after Q4 into a Q1 when, GM is shutting factories down, Ford is struggling. So I think it would bode well for Tesla
in a tough economy too, right, Jeff? China's not doing very, very well. Like their economy's slowing. Europe is going through their own inflation problem. So in a tough macro, a sequential Q1 over Q4 is very good. Yeah.
Okay. The other thing is in China, and I was just looking at the numbers by vendor, and we need an aggregate view, but China TAM is down. Total available market is down, and looks like it's down in Q1. Now it looks like BYD and Tesla are the two major positive ones that are moving in the other direction, but quarter on quarter, most of the vendors are significantly lower in China. So I think the TAM's lower, but we should double check that.
Yeah,
but if it is, sorry.
Yeah, they fell by 20%, but because of the price cuts by Tesla, that caused them to fall. But you might be indicating that you think that it's actual economic conditions and people buying is less. Is that what you're suggesting?
And if the TAM is lower and Tesla's higher, that's a good thing for Tesla.
Yeah, market share. Sure. And the other thing is, don't forget that, if we are at 440 or at my number 437.5, I think that will move the stock. But the real important is the financials 3 weeks later, right? Yeah. Because it's all about the margin. It's all about how much margin are they making after these price cuts. That is the most important number this month.
Okay, so we are all bulls and we're all very optimistic. We follow this. We have very optimistic view of what's going to happen. What happens? Is there a chance that we're going to get surprised that it's going to be under 420? Is there a potential chance that will happen? Remember last Q1 of last year, was it? Or I can't remember now, getting mixed up. No, I can't remember. Remember when we were like just down by 5,000?
Second quarter.
Yeah.
Second quarter, it was like, what happened? Is this a possibility that this can happen?
I think it absolutely is. I mean, yeah, go ahead, Alexander. Go ahead.
Yeah, I mean, in number of deliveries, I don't think we can be below 420. Honestly, I think these price cuts have really opened up the market to another clientele, a clientele that was very quick and very happy to jump on these offers. And I mean, you remember initially of the quarter when we calculated how cheap Model 3 now is in the United States. People who wanted a Tesla and were ready to now purchase a car by either financing, leasing, or paying cash, they jumped on this offer. So I don't expect anything below 420, but that doesn't say that the financials are going to be what we'll hope for in end of April. I think that's much more of an unknown than the delivery number.
Keep saying more. What are you saying here? Margins? What are you saying?
Yeah, margins. I think margins is a big subject. I mean, if you lower prices between 6 and 20%, and then are able to sell, and obviously we'll see the configuration of how much of it is 3s and Ys and how much of it is X and Ls. But if you push them out at lower prices, the real interesting thing, and I can't even speculate on the margin yet. I've been thinking about this for quite a while, and I don't want to really pronounce myself where I expect these margins. I hope they're still over 20%, but I'm not comfortable yet saying that. So that's why I'm really looking forward to the delivery numbers, because obviously the quantity is going to help us.
Yeah, just to Alexander's point, I think the earnings is what's really going to move it, because we're in unknown charter now, right? We've had these huge price drops. It's been consistent, so the margins have been consistent within a few percent. We see like a note out of Deutsche Bank. They got margins, I think, going under 20, right? So we don't know if it's going to be that bad. Is it going to be 22? Is it going to be like 25 and not too bad to hit 26? Like this is, and markets hate uncertainty. So that is really going to move the stock. Because if those margins are worse than what we think in the mid 20, if it goes near 20 or beneath it, look out. Like, because then there's a severe, not the end of the world, but I think most people think they can stay in this mid, 20 area. So if it's not, I think that does hurt profitability going forward for this year, and it could reflect in the stock price. So it's important.
Yeah, just one thing about their cost structure. Every factory, I believe, has added capacity and taken their run rate up, except China. And that was publicly stated in their, I believe, their Q4 earnings, that they were not increasing China in the near term. So that was a plan. But if you look at, I think it was the beginning of October, Berlin, I think, was in somewhere between 2 to 3K. And now they've essentially doubled from the beginning of Q4 to the end of Q1. And that does wonders for your cost structure inside of a factory when you can double, inside of that short a period of time. Austin's up. We know Fremont's been adding incrementally. So from a four walls conversion perspective, where they bring parts and then their cost actually converted to a vehicle, I believe they've moved that number favorably, considerably, by just what they've done in volume production, especially in the new factories. And then on the component side, Tesla's got a very short supply chain. They have a very low number of layers, and they have a very, basically from the time they order a component to the time a delivery occurs to the customer, they deliver directly to the customer. And I believe that they've done nothing after all these COVID challenges. I believe they've done nothing but reduce that network latency in their supply chain and move that to their advantage. When you do that, you significantly improve your cost structure, because you're using more of the newer components at lower, better pricing.
Yeah, so that's what I was going to ask you guys, right? I mean, tell me what it is that could actually surprise us and come up with lower margins than we're expecting, other than we already know the price cuts happened, right? But isn't everything else in their favor? Lithium prices have fallen. I know it may not reflect this quarter, could have been previous agreements, but the factories are now humming along. We just heard Germany's now at 5,000 per week. Things are improving everywhere. deflationary. We don't see inflationary pricing, but actually reduction in supply costs. So what exactly could a big surprise? What could be a surprise to us? Why the margins is not as good as we think?
Oh, well, I was going to go the other way.
I was going this way. So let me start with my side.
Okay.
So I do actually believe that most of what you're citing is having a long time lag. Actually, Elon told us it has a 6 months time lag until it really spills into their numbers. And then the cost reduction they presented us at Investor Day. Yes, I think we see them already partially implemented in Shanghai, but I don't think we see them implemented yet in Fremont. I think obviously the Mexico plant is gonna have the new way of doing it. But all this is not as if we snap a finger and it's now costs are now at 50%. We can have very well still have a quarter with same cost per units than Q4, and the price reductions of the cars that obviously immediately hurt revenue.
Do you guys agree with this? Exactly. What Matt's saying here? The 20% number was for 2023, not for Q1.
No,
exactly.
I don't agree with that.
It's very difficult.
I think they said it for.
I do.
You do? Okay. I thought they meant for the quarter that it would never go under 20, but I could be wrong.
Well, the thing is, I think you can't really pinpoint to a couple of weeks when your cost efficiency will filter through, bottom line. It's not as if you just now have a new production line and now costs are better. That's not how it works. You have days off, you have problems installing it, you have to re-ramp. I'm just a little bit dubious about timing. I'm absolutely medium and long-term positive. I have a little bit of a bellyache for financial results Q1 and Q2.
Yeah. But I would just be concerned on Q1. If it was dramatically worse, remember, some of that Q4, those price changes hadn't taken place. So some of those cars delivered will be under the previous price structure, I believe. I could be wrong. So I think that's going to buffer some of the price reductions in Q1. Am I wrong on that, Jeff, or whatever you wanted to say before? But
no, I think I think if you do Q4 to Q1 comparisons, there's 5 areas where Tesla should be improving. One, as I told you, is the factory conversion, because they've been adding capacity in these factories, again, minus Shanghai. The second thing are event-driven cost reductions, where their engineering team or their supply chain team go in, substitute a part, change a process, add a vendor, delete a vendor, and that's the second thing. The third thing is quarter on quarter, new pricing from vendors. Every quarter, Tesla goes and has their hand out to their suppliers saying, look, I'm delivering the volume to you. I need to see efficiency improvements for you. The fourth thing is the level loading of deliveries. Every quarter from Q2, Q3, and Q4 last year, they took the last month of delivery, where I think it peaked up at like 70% when they were coming out of the China lockdowns last year, where they delivered 70% of the quarter in the last month. They knocked it down to the 60s. They knocked it down into the 50s. I think they're going to keep going. I think they're going to knock that down. It's still the third month is usually a higher month. But when they do that, they're going to reduce their expedites. Their expedites on inbound material, and they're going to reduce their expedites with the logistics chain. And then finally, there's going to be more domestic deliveries in Europe and less imports. That's just that trend is going to continue. So I think there's a number of things that will be going in their favor, Q4 to Q1. With that said, I believe Q1 with the price changes, this will be the quote unquote worst quarter probably of the calendar year, and then they'll continue to improve it sequentially.
Is it also fair to say that when we saw them come out with their Q4 earnings call, they made a big deal about saying focus on operational margin, not auto gross margin? And is it because with the price cuts, we might be surprised that the auto gross margin don't appear that well? Is that a possibility?
Yeah, exactly my thought. Exactly my
possible.
thought.
Definitely possible. Yeah, I think that's why they did that. I think the auto gross margins will take a hit, and I think they were trying to offset that to, tell analysts that look at the operating margin and not just focused on the gross margin. Because I think most people, as soon as that report comes out, they go laser beam to that auto gross margin, and that's what they look at to see the efficiency. Yeah. So we'll see. But my point to Jeff was, aren't there going to be some Q4 that didn't make it in Q4 that were at the old pricing into Q1, which may skew average selling price higher which would help margins. That's what I was saying. Or
Yeah.
do I have that wrong?
Yeah, 55,000.
Right.
55,000 produced at the old prices that flip over, but 55,000 for 420, 430,000.
Can help with the margin. Help with the
30%.
margin a little bit.
Sure.
Yeah.
Yeah.
Yeah, well, the only thing I would tell you is that I've taken delivery of a lot of cars from Tesla, and if there was a pricing change where it was lower from the time I ordered it to the time of delivery, they usually work with me on that to meet that. So just because they were ordered it was one thing when their lead times were 9 months. It's another thing when their lead times are 3 months or 6 weeks. So I don't know how much they're working with people on favorably adjusting prices or not. But yeah, that carryover piece is where a lot of things get missed, to your point, Christian.
Yeah, it's going to be a fun quarter because it's going to be the first quarter in a while where we kind of really don't know what's going to happen, I think.
Okay, is that true? We don't know what's going to happen.
It's been pretty much like clockwork. We know the delivery, so when the earnings comes out, we could just do a basic multiplication. We kind of know the average sales price.
True.
It went up a little bit, and we kind of know the margins, and we could kind of take into fact the ramp of new factories. But this is the first one that really is a wild card, in my opinion. I don't know.
And what's the reason why it's a wild card? Go ahead.
Because of the price cut, to see the effects of the margins, to see how bad the margins are with the new price cuts, to see were they able to get the efficiency of the cost better, which it doesn't hurt as much. And I'm just using basic logic here. I'm not saying anything groundbreaking. How much did the price cuts eat into their profit margin?
Okay, well, based on what I saw when the price cuts were first announced, we initially, within a week later, we saw that the analysts didn't really get hurt. They go, well, okay, I think it's just really about a 3-5% cut in the end of the day. If they're wrong, are we going to see the stock get hammered?
No, they
did lower. They did lower the earnings per share.
How much?
They have no earnings growth, Herbert. By like $2. It was 6 and it went to 4.
Exactly.
Okay.
It went from 6 to 4.
All right. All right. Well, do we just leave this topic the way it is now? Come on.
I think we're done. Well, we can move on. We hit this topic. But now here's the upside, Herbert. If 4 was too, they went down too far, and maybe it's closer to the 5 or 6. That's the upside in the stock. Yeah.
Thank you. That's what I'm optimistic. I think it's going to happen. Okay. I'm still at my 430, but I'm shocked. Alexandra. You are bold. It's crazy.
There we go.
Emmett Peppers was bold.
You can all laugh on Sunday.
Emmett's trying to make a name for himself with the 440.
440.
I like the half, Alexandra, trying to stick out. That's smart. Use the half. Yeah.
There you go.
All right. Should we do the proxy next or the economy and the Fed?
Yes, please. Let's do the proxy, and then that's that one we have behind it. Do you have the slides?
Okay. I do. Do you want to go ahead and explain to folks? Go ahead.
Sure. Pleasure. So let me set the stage. A proxy statement comes out a couple of weeks early to the annual shareholder meeting. This year, the annual shareholder meeting is on May. I couldn't talk because I just saw somebody saying, Alexandra looks amazing today. Thank you. I was like, stuck there. I was like, oh my God. Thank you very much.
There's this guy's name, Jay Bird CyberTruck.
Thank you. You completely cut me, but I love it.
Oh, great. Now we're not going to hear anything. Come on. Get back on track. Come on. Okay.
Exactly. So this is from May 16th. Every company does that. That is stock exchange listed, have to come out with the proxy statement. The proxy statement is a long document, and they will have the whole agenda in it, and they will have the questions on which we have to vote. So let me walk you through the slides, please, Herbert.
Mm-hmm.
So the first slide is actually from their 10Q filing in October last year, because as you see in the little red circle, if you can see that, it's page 57. So in a 60-something page document, they hid in a little paragraph on page 57 and top of 58 that they're doing this year the shareholder meeting on 16th of May. We talked about this before. I just wanted to recall that. That paragraph also had in it that anybody who had Tesla shares on the 20th of March 2023, which was Monday last week, has a right to vote. So that was that. And that anybody that wants to bring any proposals to it had to bring it to them by the December 22nd, 2022. You see all those 3 dates in yellow. I just wanted to set that stage because it's so unusual. They had in the prior years, 2 years ago, the shareholder meeting was in October. Last year, it was in August. This year, it's in May. This was extremely clever by the Tesla lawyers because there are a couple of things on here that they want to make sure they get pushed through. And by limiting the time for other people to bring up proposals, remember we talked about this when we talked about Ross, we just forget about that. But anyway, we talked about it then. This was very clever because it just cut a lot of people's possibility to think about what they could do to bring some smart proposals up. Let's go to the next slide, which is the last year's proxy statement. So this is what we expect tomorrow for May 16th. This was last year's. And why did I point this out? Because it's 99 pages. Okay, so don't expect anybody tomorrow just receive that and immediately know what it is. It has usually a lot of fine print in there that's worth analyzing and will take days for people to really understand all it is about. Let's go to the next one, which was last year's recommendation by the Tesla board. So last year, people voted on 13 different items. The bottom 7 were stockholder proposals. The top 5 were Tesla proposals. From the 5 Tesla proposals, only 3 made it because number 2 and number 3, which were to reduce the term of each board member to 2 years rather than 3 years, would have needed a supermajority of 66.6%, didn't get it. And the second Tesla point was to eliminate all these supermajority points, but it would have needed a supermajority to eliminate the supermajority points. That didn't make it either. So those 2 of the 5 didn't get it. The ones that got it were the then to be renewed board members and the stock split by 3, meaning they had to increase the shares from 1 billion to 4 billion number of shares, and that PricewaterhouseCoopers was maintained as the auditor. So that was that. And then of the stockholder proposals for which the board had recommended to vote all against, actually 1 made it. This one, that is the stockholder proposal regarding proxy access. And this is actually one of the ones that Ross wanted to use. So this one was a bit bittersweet for Tesla to have lost. And they may come back on this one tomorrow. So I'm just setting the stage. I know this all sounds very legal and stuff, but I just want you to know that last year it wasn't easy yet, and it won't get easier, but they were clever by putting it early. So let's get to the next slide, please, which was the votes against director elections. So let me just walk you through this. These were the directors that were up for re-election the last 3 years. So we had Robin, the current chair, we had Kimball, we had James Murdoch, we had Kathleen Wilson-Thompson, and we had Aaron Price. And you see the years. So from the bottom upwards, it was initially the Robin was up in 2020, James and Kimball were up in 2021, and last year Kathleen and Ira were up, and they were up in 2022. And you see that the opposition grows, right? I mean, they all got elected, but what you see is that it gets more difficult for them to get elected. And Ira, it was even close because this is one that, I mean, it needs obviously 50%, doesn't need a supermajority, but we're getting into fields where you have shareholders that just don't only blindly vote with management. And there we get to the next slide. So I checked for this year because there was lots of discussion about that. Herbert, if you don't mind putting the next one up. How many of the shareholders of Tesla are now institutionals? Now, I'm not saying institutionals are the ones that always vote against management, but institutionals actually have about 6 advisory firms that are specialized in doing these votes. So yes, the Vanguards and the BlackRocks of this world, they have their own legal team that looks at them. But of the 3,216 institutions that now own Tesla, they don't all read through this. They are just subscribing to these advisory firms. Like I said, there are 6, 2 big ones and 4 smaller ones. And whatever they say, these people will vote, not because they have any agenda or whatever, just because that's the way they're doing this, because they're having hundreds of shares in their ETFs or mutual funds and don't want to be bothered with all that and just give it away to their advisors. So at the moment, we have 14.5%, which are insiders, Elon and board members. We have 3,216 institutions that make up just short of 45%. These are Yahoo Finance numbers from yesterday, and I actually think these are correct. And we are back to 40.5% of retail investors. So we are not the majority anymore, but obviously us and the board are still much bigger than the institutional investors. That's the one thing I want you all to take with you. So that's the current composition. Any questions, you just interrupt me, please. And then the next slide is my favorite dream team. So these are the current 8 members of the board of directors of Tesla. And the 4 that I circled are the 4 that are up for re-election. So it's election or re-election. Joe Gebbia, the former founder of Airbnb, is actually a new member, so it's his first election to go through. And then we have obviously Elon, and then we have Hiromichi Mitsuno. This is the second time he's up for election, so it's his re-election. And then we have Robin Denholm, who is currently the chair. The other 4, it's not their cycle, right? It's at the moment, as I've explained earlier, it's a 3-year cycle they get elected for, and so they are not up for re-election. Let's go to the next one, if you don't mind. So this is probably a bit difficult to read, but I have it in my Substack. So these are the different committees that are then formed. So you have the 8 board members. Elon and Kimball, as they are insiders of the company, are not allowed to sit on any committee. So we have 6 of the 8 that can chair or assist in 4 committees, which are the audit committee, the compensation committee, the disclosure controls committee, and the nominating governance committee. And then we have for each of them, obviously, functions. Now, this is now my speculation. First, I do believe that tomorrow we may learn that the board chair, currently Robin Denholm, may be put back to Elon. So why do I believe that could be a case? So yeah, exactly. So Elon had the board chair, obviously, from 2018 to 2021. But, sorry, he had it earlier, excuse me, he had it, but in 2018, the SEC told him that he cannot do that in this whole crazy SEC filing that was completely useless and unnecessary. But anyway, they told him he cannot remain the chair of the board. So they appointed then Robin Denholm. And as I showed you earlier, she was up for re-election in 2020, where the 3-year ban by the SEC was not over yet, because that went from 2018 to 2021. So in 2020, Robin was confirmed and re-elected as the board chair, and now that comes to an end. And now Elon is actually free to do this again. And just as a little indication how motivated he is about that, his lawyers tried 4 or 5 weeks ago to go back to the SEC and cancel the old suspension. Not that it would make anything, it was more for the reputation than anything. And the SEC obviously said, we're not opening that case anymore. But the simple fact that they put effort to it shows me that he's really interested in getting his reputation back and that board chair position back. So that's my first. Thank you very much.
And the reason, Alexandra, just not to knock you off stride here, but the reason he was, that was due to the 420 tweet, right? Part of the settlement.
Yeah. Yes,
right?
Correct,
yeah, okay.
Correct. But not part of the settlement. That's the first thing they imposed on him before they even got to the settlement. Okay. So that's that. Then the second is that Hiromichi Mitsuno currently only sits in one committee. I told you earlier, we have these 4 committees, we have these 3 directors. Usually there are 3 of them per committee to be able to take decisions, but the newer ones always only get one committee until they are sort of used to the company. And so for Hiro, I think the moment has come that he will be in more than just the audit committee, especially since he is so much involved with the whole ESG stuff. So he may get into the nominating or the disclosure committee as well. And then the Joe Gebbia, obviously, it's his first election, and then they will have to attribute him one committee. So we'll see which one that is going to be. So that's it. Oh, sorry if I bored you. I hope I don't. So I'm nearly done, I promise. So the other topics for tomorrow, if you don't mind, exactly. So like I said, they may resubmit the failed items from the 2022 agenda. Remember those 3 subjects, they were not there. We may hear, and that is going to be something that may actually move the market. We may have news that Elon has a new compensation package. Remember, I believe it will be linked to the fact that he rolled out Master Plan 3. So there are goals now that just seems overambitious. That just calls a little bit like the first compensation package. And so we may have that. Then, while I said earlier that nobody was ready to bring any other proposals, like last year, those 7 proposals that there were from the shareholders, there is one shareholder. She's called Karen Roberts-Dottir. She's a retail investor from Iceland. And she had a proposal on key man risk report. She wants Tesla to put in place a key man risk report. She actually tried already something last year. She wanted to bring a proposal up to ditch cryptocurrencies. But that one she put into late or whatever. There was a reason that she wasn't taken care of. But anyway, this year she was early enough. And so her proposal will be that Tesla puts in place a key man risk report. So I think we'll have a stack of Tesla proposals and one only of the shareholder proposals. And then the one thing that I want everybody's attention to as well, nearly done, I promise, is there is always in these proxy statements a paragraph on the wording of the related party transaction. I've already copied the one of last year, but I do believe with the Twitter deal, they're going to amend that related party transaction subject. So there may be some jewels in there. And I do believe they will propose that PwC remains the auditor for this financial year. And I think that's it. Oh, no, I have one more. So please vote. Please vote. And there are 2 ways of, making sure you can vote. And I know it's difficult for some others. First of all, you have to register your shares on that Tesla shareholder platform. Just Google Tesla shareholder platform and you get straight on it. And you have this shareholder vote guide that Tesla put out last year, and that is still the case for all the major brokers worldwide. So you can go there and make sure that everything is registered the way it should be. And if you want any further information, I did some self-promoting on the last slide, which is my Substack, where I write regularly about those things, and where I will probably write in the next couple of days once I'm done about what happened in this new shareholder proxy compared to last year. That's it. Finished.
Very good. Good stuff.
Very nice. Very nice. Okay, so let's go back. So first of all, this is Tesla's Alexandra Boomer Mama's Tesla Boomer Mama's Substack. She did a huge deep dive into Tesla board of directors. You want to go there, check it out, vote. So let's go back to this item here, which is Okay, so we do want him to be the board chair, do we not? What's the opinion of the bulls here?
I don't think it matters.
First thing is, to Wall Street matters. Wall Street will hate it. Wall Street will hate it.
Right, that's what I'm saying. I think it should. A lot of boards, look, I don't know, I'm not an expert on this, but a lot of boards are going that way, where they do set up, director, they try to split it up to have a little bit more accountability, because that's where you get into the same problem. If Elon controls the board, he's running the company, there's no one to check him. So if he goes, again, if he does stuff, there's no one to kind of put him in a check on him. So I like it broken up. Look, I'm not saying Elon can't do a good job. He's done it before, but we would be going back to the old way. And I think it would, embolden Elon to have more power. And maybe that's a good thing, but it also could be a bad thing. So I would love to know what Jeff and Alexandra think.
I actually think it will open the way for another CEO, him being the chair and somebody else slowly moving into the CEO position. I would love it. It would just take the daily stress of the CEO position away from him, and he would still be the king of Tesla.
Yeah, I agree with that. I do think it's moving in that direction. And I don't think there's anybody that's maybe one of the issues is there may not be anybody on the board that does actually check Elon. So, having maybe a stronger CEO could help in that area. It would be interesting to see this key man risk. I keep going back to this key man risk report. I haven't seen this done. Published. This happen. All major companies do this. They do succession planning. It's a private thing. At the C levels, it's kept with the board, and it's done. So, I think the audit piece is like, are they doing that? And I would assume they are. So I think there's a lot of issues with publishing something like that, by the way, to the public. So anyway, just some comments
and
on
to
that.
the competitors. Right.
Mm-hmm.
And to the competitors, you're just giving away everything. I hate the idea. And but Google that lady. I had a blast. I don't want to obviously go there now, but Google that lady. That's worth some good laughs.
I just want to ask you a question here, Alexandra. So you've got, first of all, the next compensation package, right? Linked to Master Plan 3. I absolutely agree and believe that this is going to happen. I'd love to hear what the others say. The key man risk report and the wording of the related party transactions, I think they're all connected because Elon's been distracted with Twitter and others. Tesla as an entity needs to kind of have guidelines of how far away he's able to stray or not, and to the point that the key man risk. And so if he is given a massive compensation package linked to Master Plan 3, which he absolutely deserves, which Tesla would be so wonderfully lucky to receive, he becomes chairman again. And then there are these related party transactions and key man risk report to give him guidelines. That's the way I read this. Am I completely wrong on that?
Alexandra?
No, you're not. I thought you were asking the others, but no problem. No, you're not wrong on that. I think actually on all these points, Elon and Tesla have a clear stance, and they should not be timid. The one thing I don't prompt in Tesla is thinking, if we delay the compensation package a year, people will be in calmer waters. Don't. This is not why we invest in Tesla. We want them to be bold, and we want Elon to be motivated, and we want them to speak up about any subject they feel they should speak up about. So no, I don't think you're wrong at all, Herbert.
Okay. So what should we get out of everything you just said today? So first of all, vote, be ready for the annual shareholder meeting coming up in a couple months, which is March, April, May, June, right?
Yeah.
June.
Also do expect some noise. There will be some noise if Elon wants to be appointed as a chair, if that's one of the items. I've looked everywhere and I can't see it, but there may be a second non-Tesla proposal other than the one I just discussed with you. And I think the language around these, other activities point that I put on the second last slide, I think that one is going to be something the press is going to look at very closely, because they all suspect, that there are Tesla people working at Twitter and Twitter people working at I don't know where and whatever. So all this crap will just create noise again and more drama. Nothing that's fundamentally important to Tesla, that's for sure. But just be aware that this is going to happen.
But it's a big one, isn't it? Because didn't you say that he theoretically could be voted out?
Oh, sure. Like I told you, we have a lot of institutionals now, and we have a couple of very unhappy large Tesla investors. We all know who those are. So between all that, if there is something organized, if there is, I don't think it's as close anymore as I feared it would be in January. I'm very happy about the numbers I saw there, because that's the 20th of March numbers. Those are the ones that are important. But nothing is granted. And let's just say from the retail investors, 10% are not voting just because, it's difficult for them to get organized, or they're not in America or whatever. That may be the little straw that can make it all happen. So just want to make sure everybody's prepared. Everybody knows they have their share counts, where they have them. That's the broker that's responsible for getting you your vote bulletin. If not, go on that shareholder platform that Tesla has put in place and just make sure you get your vote.
Okay. I'm going to make a statement. You guys check me on this one, which is Elon and Tesla has done absolutely everything through the roof, successful for Tesla numbers, delivery, growth as a business. And Elon's distraction with Twitter resulted in nothing, no impact to Tesla, the business at all. Is that
Well,
too much of a statement? I mean, why
The
would
business, I would
anybody
agree
ever
with you.
vote
I
him
would
out?
agree
Why
with
would-
you with the
yeah.
business, but I would not agree with you with the stock. I think Elon's
He doesn't-
behavior with the stock sales, I don't want to repeat, but with the stock, I think it has been impacted. Not the business, the stock.
He should not be worried about the stock, though. That's not his
No, they
job
should
or
be worried
care
about
or
the
role.
stock. The board of directors should be worried about the stock. A board of directors does not want a stock to go down 75, 80%, 90%. How is that good for anybody? Why would they not be worried? I want them worried. What if the stock went down 90%, Herbert? You're going to come out here tomorrow with a big smile on your face? I don't think so. I think you'd be very sad.
You wipe that smile off your face.
Yeah,
Robert.
that smile would be very upside down. So they should worry about the stock price, not day to day, but you don't want major collapses in your stock price. I'm not saying, like, am I crazy when I say that? I think I am.
The way to make the stock go up is earnings, become an earnings machine.
I agree with you, but in the
Christian?
meantime, you don't want like Warren Buffett. Let's use Warren Buffett. If Apple and Tim Cook, what if an action of Tim Cook caused the business did okay, the fundamentals were okay, the earnings was okay, but Apple was down 70%? Don't you think there would be some, hey, Warren Buffett, whoever, calling up the board, what's going on? Like, what are you doing with your stock price? You're gonna there would be questions. They're not just going to sit back when hundreds of billions of dollars are on the line on a $2 trillion, $3 trillion market cap company, and everybody's just la-di-da. And Tesla got to the point where it's a very big company, and it's a big deal when a stock price of that size goes down. I'm not trying to be melodramatic about it. I'm just being realistic. I don't know. Go ahead.
I think you are realistic. I think you are realistic, and I think we're all still traumatized of the $102 price. But let's just put it into perspective. He needed to sell more Tesla stock.
Yeah,
What could the board have done then, right? So on the 14th of December, he sold that last lot. And if you look at the stock price on the 14th of December and you look at the stock price again, beginning of February, you just have a V going down and a V going up. That's just it. And it could have held at 160 like we all had predicted for a long time, but that just broke the whole rhythm and made this V shape. Add to that margin calls, add to that tax harvesting. I know all those things, but at the same time, the Nasdaq was more or less flat, right? So we have this very specific situation. And what can a board do? The board cannot tell Elon he doesn't have the right to sell his shares, right? That there's just, I don't think this has anything to do with board responsibility or the board being able to tell Elon, come back and work more or whatever. I don't see any of the elements that where a board has an influence granted here to do anything.
I agree with you, Alexandra. I think the one thing they could have done just in private talks, again, long term, it's not going to matter. But since we're discussing it, they could have recommended to Elon, maybe there's a better way to sell your shares so it wouldn't do as much damage to the stock price in the short term. Just to steady it out, maybe keep it the flow instead of just him kind of doing whatever he wants to do. That is reasonable. But again, it's not going to matter long term. But
I agree with you. I agree with you. And that brings me back to that email from 2018 by Ron Barron, who I love a lot. And that was made public in one of those latest law cases that were ridiculous. But the good thing about these law cases is that we always see the evidence, right? And so we had that email from Ron Barron where he tried to give very friendly, fatherly advice to Elon. 5 points. I think the fifth one that stick to me was like, if everything is going really bad. Oh, thank you. Why is it today?
Distracted her again.
Distracted
her again.
Hey, is there any good stuff about me, Herbert, down there? Is there any good stuff about me?
Yeah, sure. This one, agree with Christian, could have sold blocks. Sure, you got somebody agreeing with you. One person.
Okay, so let's go back to that email by Ron Barron, who we tried very fatherly to give him advice, and zero of this was applied. It's just we have Elon, he's making us happy and he's sometimes making us cringe, and it doesn't matter. It just, I understand it matters for day traders. I understand it matters to my short-term options from time to time. I just tell myself all the time, don't do it again, don't do it again. And then sometimes I do gamble a bit, but it doesn't matter at all in the medium.
And I just want to be on the record again. It's okay. I get it long term. It was a very stressful moment and it's brought up again. So I just want to be clear. And I think honesty, to talk about it honestly and how we feel, I think is good. To ignore it and say nothing matters, I think is foolish. So Again, long term, it's not going to matter. Medium term, it's not going to matter. But in the short term, it can be really, really painful. So, yeah, but that's
All right,
awesome.
Christian,
You want to go
please
to?
help me. Yep, we're
Yeah,
going to go to
macro.
Fed, economy, bond, because as we've
I can try to do
discovered,
that.
right, the macro
So-
is the one that's kept keeping the stock
Yep.
down. And even if we got good Q1 production numbers and the stock could still be down, tell me
Yeah.
about, two questions I've got, right? One is, what is it going to take for a bull market to emerge? And then two is, if there's a recession, does Tesla go back to 100?
Yeah. So I'm going to frame this. I'm going to try to do this and not screw up. And I'm going to try to make it as simple as possible. And these are just my opinions. People may disagree. And this is not going to be Tesla specific. This is macro, but it's probably going to apply to Tesla too, unless something crazy happens. So right now, everybody knows the Fed, right? They're raising rates. We're at to 4.7 to 5. And I'm going to just break down the terms. Some people might know it, but a lot of people don't know about the bond market. It's like a big mystery. So I'll try to explain it a little bit without, screwing up too bad. So there's something called the overnight rate. That's the Fed funds rate. And that's what banks can borrow. And that's where the Fed controls. They control the short end, not the long end. So right now it's been moving up, which crimps economic activity, right? They're sucking money out of the system by raising rates, right? Banks have less money to loan. Maybe they don't want to loan. We have the whole banking crisis. So right now it's 4.75 to 5%. So here's my scenarios of macro and how it ties to the stock market. Right now, the bond market is inverted, which when it's inverted, it usually leads to recession, right? Recession, contracted GDP, earnings go down, stock market, could go down. So right now we're in this kind of zone and we don't know if the economy is going to be a soft landing or we're going to have this major tidal wave down. The Fed keeps pushing higher. So here's a couple scenarios that I see in relation. You have the 3-month at 4.77%. You have the 2-year, and I think you have the chart at 4.05%, and you have the 10-year at 3.55%. So it's inverted. So what that means is that people are scared on the long end. They're buying the 10-year. Like if you have a lot of money, they don't want to mess around with the stock market. So they're buying that, which pushes the yield down. So this is how you get the inverted yield curve, because they're nervous. They don't want to be in stocks for whatever reason. Get me out of here. I'm nervous. And then you got the Fed pushing up on the short end, which is pushing the short end up. And that's how you get your inversion. Rates on the short end going up, people scared on the long end because they think the Fed's going to cause a recession. So that's where you get this inverted yield curve, which leads to a possible recession and a stock market decline. So what's going to happen now is that the economy's still kind of doing good. So scenario one for me is people in the Fed funds futures market are predicting in rate cuts, meaning they said the Fed is pretty much done at their rope. They can't go anymore. They're going to cause a major calamity. We've seen a little bit with the banking crisis, but it's going to get much worse. And they got to stop now. Not only do they have to pause, they have to do your favorite pivot, Herbert, and actually cut rates. Okay. Now, scenario one, to me, people looking at that as a good thing. To me, that is a bad thing. Because if the Fed has already stated their base case is no cuts this year, and we see the 2 years all over the place. It's worried about recession. It moved like 60 basis points. Now it's moving back up because now it's following the Fed again. Like they say the Fed follows the 2-year, but it looks like the 2 years following the Fed, to be honest now, because the Fed keeps saying, no, the economy is pretty strong and inflation's pretty sticky. And the Fed up to now on this has been right. So we see the 2-year backing up, the 10-year yields backing up because the economy looks okay, right? We're doing 200, 300,000 jobs every month. The GDP, Atlanta GDP is positive. We don't really see it yet. So if they cut and they cut quickly like the market wants or thinks is going to happen, that means the Fed has seen economic decline very quickly. So recession is upon us, and that will cause the stock market to go down. So scenario one to me, if they cut and they cut aggressively quickly, that's bad for the stock market. Scenario two, the Fed base case comes where they do not cut. So we go all year, we muddle along, inflation's sticky, and the Fed maybe goes another, maybe Paul goes 25 or whatever, maybe goes 50, more because the economy's strong, we're still creating jobs, and inflation's not really getting down to their 2% goal. So that's also, to me, a bad thing for stocks, because the stock market could be okay, but it's almost like delaying the pain, because as they keep raising rates, more people will get worried that we're going to enter a recession eventually and the Fed will go too far. So that also is a slightly negative position to me for equities, because as they go higher, that also hurts growth stocks because the rates will have to follow, because rates are not going to stay down here. The 2-year will back up as they raise that overnight Fed funds rate. The 10-year, if the economy's healthier, the 10-year will have to go up, meaning people will sell bonds and the yield will go up to make more attractive for bond investors to buy. So as the yield goes higher, more people will say, hey, I could buy a 10-year at 4.5% or 5%. Why am I going to mess around with stocks and I'll get a guaranteed risk-free rate? So that's a neutral. Then the third one, and I'll wrap it up real here, and I love to have the discussion with everyone, that the Fed does the soft landing. So inflation, it does come down. It comes down nicely. They don't break anything anymore. Everything goes fine. Job growth is fine. The economy, GDP grows. There's no contraction. And they're able to land this plane, and we kind of go on our merry way. The stock market maybe goes up and down a little bit, but ultimately comes out of it, and we don't have a major decline. So they're the three kind of things I'm looking at. I'm leaning towards either one or two, but three is possible, but it's narrowing. So I'll be quiet there. I hope that made some sense.
Yeah, let me take it on first. So while for up to middle of February, I was all for the soft landing scenario, I don't see it anymore. I just believe the problems that it created, the steepness of the increases by the Fed, have shown us now the banking crisis, but the banking crisis is not the last thing standing. The banks hold a lot of the commercial real estate mortgages. There's less and less occupancy of office space, so they have towers and towers that they don't get the monthly payments. This whole mortgage-backed asset market can collapse at the same time. So I don't want to say everything is going to collapse, but it's really narrow now. It's really very, very tight. I hate to say that they probably need to see an increase in unemployment, and they're probably waiting for house prices to go down. I mean, I'm every evening telling myself, go back on Zillow and look at it, and I'm checking a couple of key markets, including Vegas, because that was one of the places I may want to move to. There are still no foreclosures. There's still no foreclosures. We still have a market where people are rather not moving, not putting their homes on the market. Why? Because they have mortgages at 3%, and they do everything to pay back their mortgages and not get into a foreclosure, because then the whole scenario blows up. So I'm sitting very tight, and I do believe the Fed is a bit stubborn, but I hate when people, and it's been the case for the last 30 years since I'm in the market, when people, and Kathy Wood did it again on Friday, I'm like, don't say that. When people say the bond market is telling the Fed what to do. I mean, I can tell you one thing, the Fed is not doing what the bond market tells them to do. I mean, it would be wonderful, because then the bond market would just direct us. I have a lot of beef with how the Fed is organized. I just think it's incredible that this institution, which rules world economies, this is way beyond the United States, has no oversight. I mean, now they're going to have to explain a little bit what's happening with Silicon Valley Bank and why they went there so late. But this is all masquerading. So, but the simple idea of thinking that the bond market rules the Fed is wrong, has always been wrong. The Fed is stubborn when they want to be stubborn, and it's not the Fed telling them. So I'm a little bit more concerned, like you, Christian, actually, much more than I was a couple of months ago. I found Chairman Powell absolutely uninspiring. I mean, that last Fed presser was the worst I've seen, and I've seen loads. And so I'm a little bit stuck between a stone and a hard place, because, of course, I wish we would get back. we would get back to quantitative easing, and we would get back to a more relaxed Fed policy. But I also see that none of the indicators they're interested in helps us move into that direction. So I'm quite concerned. I'm not really concerned for Tesla stock, but I'm concerned for the economy as a whole.
Yeah.
What do you think, Jeff?
Yeah, no, Christian, thanks for going through that, and I appreciate
Did it make any sense? I hope it made some sense.
No,
It did.
Thanks for doing that. And Alexander, thanks for your comments. I just had a couple of comments. I've said this a couple of times before, but it bears repeating. The Fed is supposed to have tools to to forecast employment and forecast rates, and they're really supposed to drive price stability. And they should be able to forecast. They put dot plots out for literally 12 months, and they forecast inflation over multiple years. And the reality is it doesn't appear that they have the tools that allow them to forecast a month out, literally 30 days. It's not clear that they can forecast what is going to happen and then actually make the appropriate Fed policy between now and then. In November of 2021, they called for 0 rate hikes in 2022. Zero hikes, 0%. And then we ended up hiking 7 times and nearly 4% at a record pace. And then in December of 2021, I think they added 0.9% of hikes. But you see what, that was just literally within a month of the calendar year of 2022, how far they were off. So that should actually help people at least understand that, when they're projecting something, doom and gloom or whatever, they don't really know what's ahead of them, even 30 days out, 60 days out. So the bond markets are an indicator. I'm just looking at the rates. I'm looking at technically, is there anything happening? Is there any breakage? And right now, it looks like the 50-day is above the 100-day is above the 50-day on the 10-year, which is a little strange. But yeah, technically, I'm not seeing anything crazy. But if you look at it just over the last month, there's been some pretty big swings and movements. So when I trace this down to the S&P, it's just the last couple of days have been quite interesting. Yesterday, we closed on the 200-day moving average, literally to the point on the S&P. And then today we closed on the 100-day. Again, interesting technically, like what's going on here? What are we doing? We traded up to the 50-day moving average yesterday, closed on the 200-day. Today we closed on the 100-day, actually kind of rallied at the end. So it'll be interesting to see what the markets think of this. We, in terms of data points, we don't have another Fed meeting until May, and then we're going to get a couple of employment data points and a couple new inflation data points between now and then. So it'll be interested to see what happens. And then as it relates to Tesla, it really comes down to, are they, how much can they negatively impact the affordability of a Tesla? And has Tesla responded in pricing and promotions within their bounds to be able to thwart that? And so far, I think they have.
Alexander, can you answer this question? So if there's a massive recession, that we do have a hard landing, does Tesla go back to $100?
Yes. So, like I said earlier, the drop to $100 was not linked to the economy, right? The economy wasn't all rosy in December yet, but when Elon sold on December 14th, that's when the stock dropped from 160, or it was around then, down to 100 by the end of December. So that had a couple of very specific reasons. First of all, him selling, of course, but then margin calls, because lots of people were on margin on the Tesla positions, and tax harvesting. There were people that had to respect that 30-day window when they had sold stock and couldn't buy it, right? So you had 3 pressures setting in between 160 and 100. Now, do I know whether it will ever go down to 100 again? I have no clue, and this is not financial advice. But if you eliminate those 3, and if you just look at the Nasdaq in the same period, the stock between middle of December and end of January plunged and recuperated exactly the same. So I don't think we'll see that again, because I think this was really very specific with 3 catalysts working in the same way, pushing us down. And I don't see that happening. Can it go down to 160? Sure can. I do believe 160 is a very good bottom for Tesla. But as you all know, I still think the value, not the stock price, but the value of Tesla even today is already much higher. My number is still 300.
What about the other way? What does it take for a bull market to happen? If Ukraine and Russia, somehow there's a deal made, what could happen?
Forget all that. The Fed's in control of everything, Herbert. Until the Fed has stopped raising rates, it's going to be hard to get a rally. I've been saying this for a while. You're fighting the Fed. And that's the old saying, you can't fight the Fed. Could it go up to 220? Yes. I just don't think you're going to see an explosion back to all-time highs, just because of my scenario two, that if they keep raising, if things are good, that means they can keep raising. And at some point, recession is going to happen or another thing is going to break. It's just going to get people, the animal spirits will not occur if everyone knows the Fed has the green light to keep going higher and higher. So it's hard to get that momentum. So either we need a breakdown and get, the recession and get the market down 20, 30%. I'm just saying. And then you get the buyers coming in and we start the new bull market, or you get some of this soft landing where it's very muted and we slowly grind higher. And once it becomes apparent that inflation is low and that the economy has withstood it and the Fed is done and they're pausing and maybe their next move is a cut and the economy is intact, then yes, you can then resume the bull market. So I think that's the way you have to think about it. And real quick to the recession point, I mean, yeah, if there was a major recession, would it go back to 100? I don't want to say it would go back to 100, but think of it like this. If we had a major recession where unemployment spiked, and that usually what shows a bottom in the market, right? Unemployment goes up, the market usually bottoms as the unemployment is going. That is like the bottom signaler. So if that occurs and there is a 2, 3, 4% increase in unemployment, we have a major recession, then Tesla stock will get hit, because what will happen is there'll be less people to buy the cars, even though the demand will be there. And then the other thing is, if you're worried about losing your job, there'll be an interim period of maybe 6 months where I could buy this, but do I really want to outlay 40 grand, 50 grand if I think I might lose my job? So that could cut incremental demand. Now, I think Tesla demand, with being, electric vehicle, a great product, I think it will withstand it way better than everyone else. But that doesn't mean the stock price doesn't get hit, because people will sell first and ask questions later. They're not going to wait around to see what the demand is. They're going to sell it down, and then people will come back in once they, recognize kind of what happened before. So that's just my 2 cents on it.
Okay.
Was that positive?
No, I don't want you to be positive, but
No,
it's
I
just
actually agree.
I'm just being honest. I'm just giving my thoughts as I think them. It's not
fine.
what I want or what I don't want. It's just what I think might play out. That's all.
Yeah, it's nice to know it's going one way or the other. But what's worse is what we've been doing for the last 6 months, which is flat and no good news will make it go up. No bad news, just keep, it's just negative.
It's because the Fed, Herbert. It's like,
yep. No, I agree.
Yeah, I'm just saying they're in control, and as long as the market, I wish it wasn't like this, but as long as the market, waits on bated breath for every single word that Jay Powell has and analyzes it, you're stuck. We're stuck in this little window until something breaks. Yeah, inflation or whatever. Yeah.
Let's say that they still did not do a pivot. They're going to stick flat and pause for the next 6 months. Okay. We have the CyberTruck come out. We have FSD version 11 showing that it's amazing. We have earnings go really well in Q1. We have manufacturing at scale at this point. Doesn't matter, right? None of that matters.
No, I think if that happens and Tesla, the business, outperforms what people think, I think it could get back into that 240, 260 and push up into higher twos. Yeah, I think that could happen.
The CyberTruck
and I mean,
is
Herbert,
critical.
your question was... yeah, go ahead, Jeff.
I was just going to say the backlog, if that backlog is proven, even a fraction of that backlog is proven to be hardened and real, and Tesla has the ability to produce them at scale, the market will assign value to that, and that those new product cycles do have the ability to kind of bust through macro issues. So. I mean, I think that every week we're getting closer to size. So if we stagnate on yields and on the Fed funds rate throughout the entire year, we just chop and stay up near 5%, but CyberTruck's on track, and that product actually starts getting out there and actually starts influencing both. It influences the media, but also actually influences the bottom line, because Tesla will have pricing control, and if they can prove that they have supply and that order book is strong, that will help. I'm not so sure yet on FSD 11. There'd have to be a fairly big milestone on FSD achieved there has to be something that would move the stock significantly, whether it's some sort of fleet that starts up or something. But the CyberTruck, I've said this before, I think it can be a recession buster.
I know. I'm holding to it, Jeff. I'm holding
And
to
think
it.
of it like
I've got. I've got
Herbert,
recordings of Jeff many times over many shows calling the CyberTruck a recession buster. Here we are in a recession. Here we are with the CyberTruck coming out. Show me that the CyberTruck is a recession
EVs,
buster.
Just let me say one more thing. EVs are a recession buster. In the last recession, the drawdown was between 16 and 36% in total vehicle sales. And EVs are somewhere between 50 to 100% of total EV sales, moving up year on year. So they could actually break through that. It is possible. So you have to look at, if we're going to look at history and apply history, saying this is what's going to happen going forward, you have to look at that history as well and apply it going forward.
I agree with you, Jeff, but the only thing I'll say the Cybertruck could do it, because the 3 and Y are kind of known quantities. If you get in a bad macro and everybody's like the economy is not very good or it's subpar, and you see Tesla with this new product, and people are wow, Cybertruck orders through the roof, they're selling like hotcakes in a tough macro. People are really going to wake up to that, and they're going to want to own that stock, right? That's going to be, like you said, a recession buster, and people will wake up and they'll, the buying pressure over the selling pressure will push it up, right? Because they're going to like, where'd this come from? How are they selling all these Cybertrucks in this bad environment? So I think that would weigh more than the 3 and Y, because everybody's kind of got those numbers baked in. But yeah, I get your point. Yeah.
And the stock market
and
looks
I want to add to that. Yeah, and I want to add to that. Just in the last quarter, Tesla in the United States, because the Cybertruck is a US product, went from a 4% market share for all cars in the United States to a 5.4%. So this is an enormous increase. With the Cybertruck, we're getting into another league. The recession is going to hit all the competitors much more than it will hit Tesla. So Tesla will gain market share during difficult times, during good times as well, but during difficult times even more. And as much as I'm worried for the overall economy, I'm really not worried. I've stated this a couple of times again for Tesla. Yes, it could drip down to 160, but I do believe it's the first company to come out there and gain market share and actually overperform of all the car makers or even all the tech industry companies out there.
Herbert?
Yep. No, this is good. I mean, we're finally hearing some potential. I'm always just looking for something that can get us through. Otherwise, I'm prepared. I'm prepared for a negative year. Does anybody change their estimates for earnings for 2023? I think I've got here. Crest says earnings per share $7 to $8. I'm at $7.
If that happens,
I wish.
If that happens, you're going to have a 300 plus.
I'm at 7. I'm at 7. I've been at 7, but because I'm expecting that the margins are going to be incredible, that they're going to have more cost savings. But I mean, I've not seen anything so far in the first quarter that's going to change my estimate, because, like I said, everything's in scale, everything's going really well, except for the recession keeping the stock price down. But in terms of margins, I'm still very. I
think Alexandra hit it, Herbert. You got to wait for the Q1 earnings print to see what those margins are, and if the earnings hold up and they're better than everyone thinks, no, that'll be proof in the pudding. Right now, they don't know. You know it. You think you know it.
No,
but no one else
like you
knows
saying. It's like you saying the only way we'll know the earnings for 2023 is wait until January when they tell us what the earnings are for 2023. You'll
get a better idea in this macro what Tesla's margins are with the price cuts. I'm telling you, that's how it's going to work.
Okay.
Now, I don't know if the stock price will take off because of that, but it will reassure. It won't go to 100 if it's good. It'll stay. It'll probably, this 200 area, maybe bounce through it. I don't know. Again, that's speculation, but Herbert, what I'm saying is, go ahead, Jeff. Yeah.
I'm sorry, Christian. I must have a delay on my end. There's 2 other wild cards. One of the things I forgot in my list of 5 things that are going to drive cost reductions. One of them was the commodities rollover, and in a recession, that commodities rollover accelerates dramatically. So it'll be interesting to see, because when you're in a stagnant industry and you have recessionary input pricing, you're still in you're still in a world of hurt because your utilization is really low in your supply chain. But when you're in a growing and an accelerating thing, which is EV inside of total auto, and you have recessionary input pricing, I mean, I don't know. It could be really interesting. That is definitely some of the wind at Tesla's back. And then the other thing, just going back to the competition piece, is right now, the more and more the EV adoption rate increases, the more and more consumers are wanting those vehicles over a non-EV, and the cost of ownership's lower. If the competition's in a little bit of a catch-22, because right now it costs more money for them to capitalize and ramp EV because of where the interest rates are. So they may not be able to ramp at the speeds that they previously promised. This is actually one of the reasons they're not producing as much as planned. So that's an interesting thing to keep an eye on, is can they ramp at these interest rates? Do they have right now they're at negative gross margins to 0. So can they ramp at these interest rates? I mean, again, this whole thing of like, if there's a recession, what happens? Total auto comes down. EV's probably still strong, but these companies have EV and non-EV. So are they going to have the actual cost structure to be able to ramp EV separately? And that may be why you're seeing some of the separation now in reporting.
Okay. Last topic then is one of the major reasons why the stock fell, Tesla stock fell pretty big time. 3 reasons, right? It was macro, which still exists, China demand, which we're showing right now that there wasn't an issue for Q1, and then there was Twitter. And so Tesla, Elon announced recently that Q2, it looks like by Q2, they're going to be at break even at this point. Feels much more confident. He's using language. It's a little bit more confident about that. And then they recently announced that they're going to now just really favor the verified. He's going to try to boost their verified. What's your opinion about that strategy?
Okay, I take that without any issue. So the first thing is I'm very happy that Twitter is break even, because that means Elon doesn't have to sell further Tesla shares to finance Twitter. So that one is just, golden. Then the Twitter Blue. So I am Twitter Blue for at least, 4 or 5 months. I found today's value added very limited. I don't see, much purpose to it, but I absolutely want to show my support for Elon's cause. I think the fact that he bought Twitter was something that I was completely on board from beginning of April when he announced it last year, and I want to be part of it and pay my little monthly cotization. I do believe actually we should get better service, but I think it probably turned out to be a much bigger mess than he had anticipated, and the new stuff that should roll out is delayed. What the heck? I mean, we know that 2 weeks is never 2 weeks. So the whole Twitter story seems calmer waters now, and the fact that he wants to initiate to help people make the decision to purchase the $8 subscription or $7 if you take a yearly subscription shows me that other stuff is coming that will be limited to Twitter Blue users only. My proposition is, like we do here, right? We should all strive to produce good content, and then good content will be remunerated. And if you are remunerated for good content, well, then you're very easy to pay the $8, right? It should be an ecosystem that favors the production of good content. And if we get there, and if the first step is that we all have to pay $7 or $8 a month, that'll be it.
Anybody else?
Yeah, I agree. I'll just say I agree. Good. Well said, Alexander.
Thank you.
Good. So the only thing we're missing is fixing the macro. Can you guys get on top of that? And once we do,
I'll call Jay Powell.
Christian
Yo,
for president.
Jay, what's going on?
Christian for president. There we are.
For Fed president.
Chief.
Yeah.
Fed
Gotcha.
chair, president, everything.
Whatever.
That's actually
All
the
right.
I
most
could probably
important
do a
job in
better
the world.
job than Biden and Powell, to be honest. Yeah.
Most important job in the world. Okay. Thank you, everybody. Appreciate it. Hopefully you felt that you got a little bit brighter, and I think I did. Especially thank you, Alexandra. You are amazing, and really appreciate the information you share every week. Thanks, everybody. See you again next Tuesday.
Thanks, guys.